Let's get started. Today is September 30th, marking the end of the month, and let's take a closer look at the financial market from the insightful perspective of wave theory to better understand its trends. Let's begin our discussion with the first instrument, which is gas. We have a time frame of 4 hours to complete this task. An upward trend is forming here. We can clearly see the first impulse wave displayed right here. The initial impulse wave comprises segments 1, 2, 3, and 4. Wave 1 is an extended movement with one subwave, followed by a correction in wave 2, then waves 3, 4, and 5. This marks the completion of the first impulse wave. After the first wave, we have an ABC correction in the opposite direction, and we see this ABC pattern. The completion of the second wave correction for gas typically occurs at the 236 Fibonacci level. A 236-point drop is generally regarded as a deep correction, and numerous traders tend to favor this type of correction. This is due to the fact that the lower the correction dips, the more advantageous it becomes to purchase gas for the upcoming impulse. Therefore, the most advantageous correction is 236, which is what gas has done. Those traders who chose not to give up and instead persisted in trading gas should be seeing profits now. This is because last week we experienced one stop loss on gas, but we managed to catch it beyond that level. I subsequently informed everyone in the closed channel that we would make another entry after this significant deep correction. Basically, the price is breaking the channel again for the second time. I'm entering the market to buy again, and today I already have a profit of $2,400. This clearly demonstrates that both discipline and effective risk management skills will consistently reward those traders who diligently continue to perform their jobs well. Newbies who chose not to trade gas after experiencing just one stop loss found their psychology significantly shaken, and as a result they will unfortunately miss out on this potentially profitable trade. So always apply and manage risks properly, and then you can trade for a long time and work on positions from the second or third attempt. It will ultimately go in our direction regardless. This means the market is developing within the framework of the third wave. My stop loss is strategically set just behind the second wave, and the risk per trade is calculated at 16.18%. My profit target is positioned at the 161.8 level, indicating that we are currently navigating globally within the third wave, which will rise above the first wave, and we are anticipating continued growth in this trend. For the take profit target, mine is currently set at 8,300, which means our position ratio is approximately 1 to 5, 1 to 6, or 1 to 5. This indicates that if someone were to inquire in the chat about the possibility of purchasing gas at this moment, I would definitely advise against it, as this is certainly not the optimal entry point. It would have been much more advantageous to buy at significantly lower prices to effectively minimize risks, which is absolutely essential in trading to protect one's investment. This is about managing risks properly, making the most profitable trades as many times as possible each month, so your win rate grows in a good progression. We're currently pausing gas purchases to secure a $2,400 profit. We succeeded on our second attempt. Next, guys, the instrument is Metastocks. I believe you might recall from my posts on Instagram and Telegram last week where I shared this stunning layout that clearly indicates the formation of the first, second, third, fourth, and fifth waves occurring in this particular area. The fifth wave effectively completes the overall trend, as we all know, and subsequently a correction in the opposite direction occurs, ABC. If we carefully break down wave A into its subwaves, we identify 5 distinct segments, 1, 2, 3, 4, and 5 of wave A. Next follows wave B, composed of subwaves 1, 2, and 3, which represents wave B. And finally, after wave B, we have wave C. Wave C is composed of 5 distinct subwaves, and it frequently falls below the level of wave A. The initial target for wave C will be the 61.8% Fibonacci level, while the second target will be the 50% level. Currently, we have already secured a profit of $1,700. The primary advantage of this position was that when you decided to sell Meta at this point, you could set a remarkably short stop loss and simultaneously achieve a significantly large profit. In this strategy, you will maintain a position at level 1. My training program includes students who typically establish positions ranging from 1 to 10 in this area, allowing them to hold these positions and let their profits continuously grow over time. I believe it's significantly better to trade gas and metals at this moment than, for example, gold. Many traders nowadays seem to simply glance at gold and feel compelled to trade it in this highly unstable market, so I'm gradually shifting my focus to explore other markets a bit more. I'm actively trading metals and gas more frequently, while I plan to make fewer trades on gold due to the market currently being at historical highs. Ideally, we should wait for some clear reversal patterns to develop. Everyone here is doing well. Right now, my risk per trade in this position was $600. Now, I currently have $1,800 in my account, which means I've already made a profit of 1 to 3 times my initial investment. However, I plan to stretch it as far as possible. If the market drops even lower, we could potentially earn up to 1 to 6 times our investment. Pulling between 1 and 6 at 3,800 RPM. But the setup was just perfect. Everything was immediate. The breakout happened on the first try. We set the stop and it started to fall right away. An ideal market. If it continues like this, we will steadily earn and allow our profits to grow significantly over time.
Such trades like these don't occur every single day.
Let's move on. Next instrument is oil. Today I presented the detailed analysis for oil to you all guys. The initial impulse is developing, followed by corrections and a trend beginning. As is our usual practice, we first examine the daily time frame before transitioning to the lower time frame. After the second wave, we observe the first impulse wave, which is subsequently followed by a second wave correction occurring within this specific range. A price range usually has a corrective nature, meaning it typically occurs during market corrections or adjustments in trading trends. If this price range is indeed a correction, then the market is likely to break through this established range soon, settle briefly, and continue its downward trend, as it appeared to do after a significant downward movement previously. Make sure to carefully note when a range appears following a downward or upward movement to clearly understand whether the subsequent correction is bearish, indicating a potential downtrend, or bullish, suggesting an uptrend. That's why I'm holding on to sales here, eagerly waiting for us to break the lower boundary in oil, which might take 2 to 3 days, and continue the decline towards 62.63. That's the reason why we've already begun selling our oil through a closed and secure channel. Initially, we made several purchases last week, but just yesterday the entire scenario changed significantly. I observed a bounce from the upper boundary, signaling a correction, so we sold and closed purchases with a small profit. Therefore, it's very important to keep track of updates in wave analysis. The market can change every day. So if we were buying stocks last week, we began selling on Monday because we noticed clear reversal patterns emerging in the market. This indicates that the market is shifting direction, and it's crucial to adapt quickly. Otherwise, you risk losing money on your investments. Staying informed is key. On the 4-hour time frame, there was a downward movement. The first wave followed by an ABC correction, the second wave. After that, I attempted to sell in this area. We established a stop loss here, and we set a take profit level here. Overall, the trade features a brief stop loss and a significantly large profit potential. If we can successfully get a 3 here, we'll proceed down and can earn again at odds of 1 to 5 or 1 to 6. The potential risk associated with my oil sell trade in this situation is $700. As always, by maintaining the risk at just 1%, my total profit here amounts to $4,200. With 4,200 units, well, it's nearly a 1 to 6 positioning ratio overall. I think you need to learn to make such positions in the market as well. Wave analysis provides a significant advantage when trading, particularly during the 3rd and 5th waves, as well as during ABC corrections. This approach enables you to execute highly profitable trades, and remarkably, you only need to achieve a success rate of 20-30% in your trades to earn substantial profits in the market. Many traders don't understand this, unfortunately, especially beginners, but over time it will all come. Let's move on. The cryptocurrency market. Let's take a closer look, everyone. Today I'm actively trading 2 popular cryptocurrencies, Bitcoin and Ripple. I don't take on much crypto because mostly all cryptocurrencies tend to move in one direction. My main focus is Bitcoin. Sometimes I add Ethereum, I can add LTC, I might trade Solana occasionally, but right now, looking at all the crypto, it seems to be bullish, indicating growth.
For Bitcoin, let's conduct a thorough market analysis once more, as it's crucial to understand which wave we are currently in and what to anticipate on the higher time frame, D1.
The sequence shows an initial impulse followed by corrections, then another impulse, and now we observe the first and second stages. I essentially informed you last week that this recent drop is simply a market correction. A correction is valid as long as it is smaller than the upward movement. If this correction moves lower than expected, it would suggest a potential new downward trend or possibly a more significant correction ahead. So here with Bitcoin, we are trying to buy, At the beginning of the week, we opened purchases, waited for the correction to finish, waited for the channel breakout, and are working on the third wave. That is 3, 4, 5. So this movement 1, 2, 3, 4, 5 will all be the fifth wave, meaning we are globally working on the fifth wave. The fifth wave typically manifests on the daily time frame over a duration of approximately 2 to 3 months, so it is advisable not to rush to conclusions regarding potential trend reversals. There will indeed be a fifth wave, likely according to various analyses, but this process will take time. We have only just formed the initial first and second sum waves, and subsequently we will experience waves 3, 4, and 5. Each of these waves is expected to take around 2 to 3 weeks to complete. Therefore, the entire process will aggregate to about 2 to 3 months. Given this timeline, it is wise not to hastily sell Bitcoin. I am currently focused on strategically buying more instead. Next, on the 4-hour time frame chart, we can clearly observe the beginning of a potential trend for Bitcoin. This consists of 1, 2, 3, 4, and 5, which collectively form the impulse. Next is the ABC correction, which is a correction. The correction is going back to around 23.6, again a deep correction. The most favored market correction, which the financial market rarely provides, is often highly anticipated by investors. Then there will be channel breakouts, and possibly I see the market in such a way that this will be the first wave on a higher time frame. This will be the second wave, and then the next third wave of growth. On the daily time frame, all of this represents the first and second subwaves, followed by the upcoming next third wave. That's why I'm buying Bitcoin. We are also working here while managing risks. Here we have a clear stop, and just over here is the designated take profit. Once again, our position ratio is set at 1 to 3 because we are working on the third wave, the upcoming impulse. Usually, the third wave will consist of the first, which is already forming. Why the first? The first wave is made up of 5 subwaves, 1, 2, 3, 4, and 5 sequentially progressing through each stage. I have already bought, and I will just hold these purchases until the target level of 161.8, which will be the third wave. So, congratulations to everyone on Bitcoin. We have a profit of $300. The next instrument we have is Ripple. We currently hold an open buy position on Ripple cryptocurrency. In this analysis, I focused on the daily time frame, and I am currently working on a buy position. I also shared on Instagram and Telegram that a noticeable upward trend is forming in this situation here. 1, 2, 3, 4. A level has formed. They didn't allow the sellers to lower their prices. And another distinct pattern formed that resembles a triangle shape quite clearly. We need to successfully break through this upper boundary to begin our upward rise. Based on my previous purchases, we acquired Ripple at this point. We set a stop-loss order just behind the critical level, and fortunately, we haven't been knocked out yet. The market has experienced a slight turnaround, so if this level manages to bounce back, it could potentially trigger a significant upward movement. This scenario may represent the fifth wave of growth. Similar to Bitcoin, I am anticipating a rise in Ripple. It might just be in the initial stages, but since we didn't break through that crucial level, that's a positive sign for us. Perhaps this level will serve as support from which the fifth wave of the upcoming impulse movement will begin. So, Ripple is currently a minus. We are holding the purchases for now. Now, regarding gold, everyone, we currently have no open positions in gold trading. I don't really observe a clear reversal yet. There are no reversal channels visible, and I see gold prices are rising. The stock market opened again, and gold prices shot up significantly on Monday. So I definitely wouldn't trade it for anything right now. Gold appears to be targeting the 2618 level, which is likely the next significant objective. However, I don't observe a proper correction here for trading opportunities. It's overbought, and I feel uncomfortable trading at historical highs in such markets. On the 4-hour time frame, we actually have a detailed layout here. We formed a sequence of 1, 2, 3, and 4. After that, we observed the first extension followed by a second correction. The third impulse is notably the longest, while the fourth wave is contained within a triangle formation. This fifth wave might potentially be the final one, but once again I would recommend starting to sell gold on a confirmed breakout of this channel for a strategic entry point. That will be tomorrow. I will indicate in the channel that we can try to sell on a breakout of this channel. If the price continues to rise even further, we will inevitably miss this crucial entry point since there's currently no reliable wave patterns to analyze. We really need a small correction, ideally an ABC pattern, before we can confidently start buying gold. So everyone, please trade gold with careful consideration. It's better not to trade than to lose money in such a market because, look, today the candle is down. Probably everyone started selling, thinking correction, and then it went up again. It's hard to make money in such a market right now. Consider trading natural gas. Be sure to check out Meta, as it presents a fantastic market opportunity. Oil prices are currently stable, while Bitcoin and Ripple appear to be performing well. Let's also take a closer look at the current currency market. Let's take a look at the first instrument on the currency market, USD. For USD, we have open sell positions from last week, currently with a profit of 465. Here we are currently forming the very first impulse wave, which will be followed by wave A, wave B, and then a wave C correction. This could be considered a standard or typical type of correction in this context. And there is a possibility that there will be a decline. However, let's not overlook the fact that the price has established a clearly defined descending channel pattern. If we break through it, the upward movement may continue, and this was an impulse, correction, impulse. This could either be a short third wave or the first subwave, second subwave, 3, 4, 5, and the upward movement may continue. Therefore, there will be two scenarios for the euro. Here's how we will proceed on the 4-hour time frame, and I'll show you exactly what to do. Here's the 4-hour time frame, where sell positions are open from last week. We sold here. Next, we formed a level plus 5 waves up, ABC correction. The ABC correction worked beautifully at the key 50% retracement level. That's all for now. A new first and second wave of developments will form again shortly. If the price consolidates firmly above this key level, the first upward wave may start from here, followed by waves 2, 3, 4, and 5. If we consistently remain below this critical level, we might risk falling again, and as a result, the euro could continue to experience its downward trend. That's why the current situation here is a balanced 50-50, because if we consider this occurrence as the fifth wave, it could potentially represent the first wave of a higher order. This scenario would classify this as our second wave and could ultimately lead us to a third wave upward movement in the future. Therefore, we cannot completely dismiss the possibility of the second scenario, where the euro could potentially return to test the maximum level around 1.22. We'll keep an eye on the updates. We have news coming on Friday. The first Friday of the new month brings exciting and strong economic news. We'll be watching. By Friday, the situation may become clearer. Next instrument, guys, is the Canadian dollar. I currently have an open trade positioned on the Canadian dollar today. Trade is now open. Guys, if you're looking for a market entry, you can check the Canadian dollar. Look, if we analyze the 4-hour time frame, we can see that a significant level was formed from which there were 3 distinct bounces. After these bounces, the price increased, indicating a strong upward impulse that consists of 5 subwaves. This movement was subsequently followed by a correction which can be characterized by a triangle pattern, or it can alternatively be represented in this specific structure, a potential correction or a triangle pattern forming in the overall second wave. Currently, this structure is being broken, and if the candle closes firmly, a continuation of the third wave may begin. We had such a weak correction, shallow. To attempt purchasing the Canadian dollar, we are placing a short stop here at $343, which results in a profit of $2,700, indicating a favorable 1-to-10 trade ratio. I'm currently trying to implement this specific trading scenario. I've already made a buy entry, and if the trio of assets rises, it could yield returns of 1 to 10 times. But if there's any movement up then down, we'll get $300. Loss is significant. The key is to manage risk effectively, as a tight stop with high profit indicates a very aggressive trading strategy. We will also keep an eye on the Canadian dollar as the situation develops. Colleagues, I remind everyone today is the last day for a 20% discount on all plans. You can send me a message directly on Telegram. You still have the opportunity to either extend your current plan or connect to a new one. Feel free to message me for assistance. Please note that the 20% discount is only valid for just one day. However, I will hold this discount until tomorrow, as I anticipate many payments coming in, allowing me to keep it available for one additional day. Additionally, you can join our exclusive closed channel, where I share valuable entry points and detailed scenarios regarding when to close and exit positions effectively. You will have access to comprehensive analytics on a daily basis within the secure closed channel.